And what my goal is to do is today is to get you to a point where you fully understand everything you need to regarding crypto, how to make money long term, how to make money short term. And yeah, obviously this is not financial advice, but it's made me a shit ton of money. And a lot of other people as well had a lot of money too. So like we said, right, it's evolution. And what you got to understand is like with the current monetary system we have now, there's a lot of problems with it, such as it's not scarce, it's easy to use, but with crypto, the biggest thing you got to understand is it's the natural progression of how money's coming. Just like how millions of years ago we would trade like barter with shells, then eventually evolved to gold, right? Then obviously the monetary system. Now we're almost in a cashless society anyway, right? Using bank cards, credit cards, Apple Pay, especially out in Asia, we have this like QR system where you don't even need cash. But that next evolution now is obviously cryptocurrency, which this is a complete evolution. And what you got to understand with crypto, just the real basics first. What makes it so special is it follows something called blockchain technology. Blockchain technology is very, very simple and it's very, very beneficial. So, firstly, what is it? Imagine that every single time a transaction is done, that transaction is going to be written down on the blockchain. For now, just imagine a bit of paper, like digital paper, and it's written on that digital paper. And every time it's written down, it has to be checked and verified by a number of other people who are verified in the space. So, what that means is, and how it is beneficial for us is, let's say, for example, you wanted to buy a house or you wanted to, sell a car or something to someone. With this current traditional system we have now, you don't really know if that money is legit. You don't know where that money's come from, and you don't even know if that person who's potentially buying it off you even has the money. But with crypto, it's completely pseudo anonymous. And what that means is essentially like it's public, but it's also private at the same time, meaning you won't know the individual who owns a wallet address. But if you were to do like a transaction or something, you can give someone your public key and they can look inside your wallet without being able to touch it to see, oh, they actually have that money because they want to actually buy the house. They have proof of funds. Vice versa, it stops with fraud. It helps you so much as well because, like, if you send money, or for example, someone sends you money, right, it can't be reversed. Everything's permanent. And it has so many different use cases, but this is why we got to understand what's happening right now. Because the main crypto we start looking at, right, which everyone talks about, is firstly with Bitcoin, right? Obviously, there's so many other ones, but you have to understand that Bitcoin is literally the most profitable investment of all time. I mean, this presentation was made in like 2018, I'll be real with you. But as of then, Bitcoin was up 62,500%. Right, you compare that to stocks like Domino's, Netflix, Lululemon, and Amazon. They have absolutely nothing to the sheer power of what happens with crypto. Now, obviously, with crypto, like if you don't understand, there's three ways you can make money with it. Right, you can obviously hold it, you can buy and hold the coin over time. I do that; it's the easiest one. Like there's no sort of, you're not trading it. Right, you're just literally buying a coin, you're owning an asset, and you're holding it for a period of time. You can do exchange trading, which I like to do as well, where you can basically accumulate more of your coins. So, for example, if you just hold, you buy one Bitcoin, let's say at $10, it then goes up to $20. You made, that difference. When you trade on exchanges, what you can actually do is accumulate more coin. So, if you start off with one Bitcoin or 0.111 of a Bitcoin, you can do the same sort of like, entry criteria which we use on our technicals. But but you can do this for the buy side. When you're selling, right, you're going to be accumulating more coin. For example, you buy one Bitcoin at 50K. Let's say you buy one Bitcoin at 10K, right? It shoots up to 20K. You take your profit, it dips down to, let's say, 15K, right? And then you buy in again. You've now just made 1.5 Bitcoin, right? Obviously, like it's just the same thing as trading, but what you're doing is trading on exchanges such as Coinbase Pro, such as Binance, and you're not using leverage. So you're not trading on MetaTrader 4 if you exchange trade. And again, what you're doing with exchange trading is you're accumulating more of the coin. So obviously with crypto, you buy coins, which are assets, digital assets, and you can obviously trade them on exchanges. Now, meaning you have to be careful with your coins as well, and store them in the correct way, which we'll get into in a minute. And then obviously the third way is margin trading, which we all do. We all margin trade on Forex, right? Where you're, for example, calculating your lot sizes, you're using leverage. I wouldn't really recommend doing that, to be honest with you. Well, I don't really do it on crypto only because the spreads and the commissions are so fucking high. It's not really worth it. I just stick to doing trading and exchange trading and obviously holding, but without margin. Yeah. Now, look, obviously, why is crypto so powerful, right? We're seeing a deflationary asset for the first time in history. If you look at the purchasing power of a dollar, right, or even a pound or Swiss franc, it doesn't matter what currency, it's all lost its purchasing power over time. If you think about it, I remember when I was a kid, let's say we go back, I don't know, 20 plus years ago, right? I remember I could go into the local sweet shop with like 10p and I could get bare sweeties. Now, if I go into that same sweet shop with 10p, bro, I'm not even getting a plastic bag, bro. You know what I mean? So with crypto, though, what happened if you had a Bitcoin 10 years ago? You couldn't really buy a lot. But today with a Bitcoin, I mean, shit, we're saying a 40K, right? So we're experiencing deflation. And what deflation basically is understanding that okay, with crypto, there's only going to be a certain amount of coins. Now, each crypto is going to be different. When I say crypto for now, I'm just going to refer to Bitcoin specifically. But with Bitcoin, there's only ever going to be 21 million coins that can come into circulation. Okay. Now, what this means, right? Obviously, with US dollars, it's the opposite. There's no limit. They just print as much as they want, right? Now, because there's only a certain amount of Bitcoin in the space, right? When money flows into it, it naturally causes the price for one of them to rise. Right? It's not like they can print more and more money. With fiat currency like the dollar, the reason why over time, over decades, it's all devaluing and you can buy less with it is because they can print more. Right? With Bitcoin, they can't print more. There will never be more than 21 million coins. Right? It's just part of the code. It's like gold, physical gold. There's only a certain amount of physical gold on the planet. There's only a certain amount of physical diamonds. Now, also it's a technology, right? Now, different cryptos have different like use cases and different technologies. And that's a key word. Write that down. Use case. What do I mean by use cases? Like, what purpose does it solve? What is the purpose of that coin being in existence? Specifically, what we're seeing with the crypto space is the chart over time, right? It's not like, for example, a Forex chart. You can trade it like that, but you got to realize on the higher time frame, it's printing what we call an S curve. An S curve basically means the adoption of technology over time. So just like how, for example, in the 1900s, you go back to like telephone, all the electricity, air travel, cars, all this stuff that came out. Over time, no one really was using it. Everyone was skeptical. Over time, what happened? It got more and more and more adopted. And we are seeing the same sort of S curve print on the Bitcoin chart. And obviously, like with crypto, they all pretty much follow Bitcoin. And this is with the Bitcoin chart back in like 2018. Right. So I've been doing this thing literally since 2018, and it follows the exact same cycles every time, which does a 4-year cycle. And if you remember this 4-year cycle, it literally has the power to make you so much money. Obviously, not financial advice, but it's actually scary. So check this out. What happens with Bitcoin, right, is obviously there's 21 million of them, right? But how do we get those 21 million Bitcoins? So think of those 21 million Bitcoins, right, of like locked up in a safe. And what happens is to get access to those Bitcoins, a miner has to come in. And what the miner will do, what the miner will do is he has to basically crack a code on that safe. Now, there's billions and billions of codes, right? Almost unlimited amount of codes. So what happens is every time he cracks one of those codes, the miner gets rewarded part of the Bitcoin. How much of the Bitcoin? Well, this changes every 4 years. And this is one of the keys into why crypto like appreciates so much over time. So this is something called the halvening, which basically means, right, back when Bitcoin first come out, every time that code was solved, there was 50 Bitcoins being rewarded. Right? Every 4 years it gets cut in half. Right now it's 6.25 coins. In March, it's going to be 3.125. And then 4 years after that, it's going to be half of that and half of that and half of that. So what's happening is we're seeing the supply get lower on what we're seeing for demand of crypto. I mean, I don't think I need to tell you guys this, but we're pretty much seeing the demand increase for crypto. So when supply is low and demand's high, what happens to price? Price increases. So what happens is these crypto markets create a 4-year cycle around, if we go back to this, it creates a 4-year cycle around this halvening. And what you basically see, right, is we can actually just pull up the actual chart on this. I mean, this chart was taken back in like 2018. But look, if we go to the actual Bitcoin chart, and if I'm looking at Bitcoin in higher time frame, I always look at the BLX, the Bitcoin Liquid Index, because when you look at like Bitcoin, it's just part of one broker and one data feed. But yeah, essentially, also you have to come down here, go settings, and turn it to a logarithmic chart to see the overall thing. So if you remember earlier, what did I tell you? Right, S curve. You're seeing that adoption of a technology over time. Look at the chart. Right, you see how the chart is growing because A, more money's coming to the space, and B, more money's coming into the space because the technology is getting more and more adopted. Bro, you have countries like El Salvador now literally accepting Bitcoin as their national currency. Crazy, right? You have BlackRock, right? And you have some of the massivest, like BlackRock. If you know who BlackRock is, right? It is BlackRock Wealth Management. BlackRock is essentially the how much? Let's show you assets under management. $8.5 trillion, bruv. Vanguard as well, 7.2. And these guys, right? These guys are getting involved with crypto. These guys are getting involved with crypto. So what's happening now is as more and more money is coming into the space, of course, it's causing that price to appreciate. But it can't just go up, right? Why can't it just go up? Because remember the nature of the game. 90% of people must lose. So why do most people lose? Most people lose because of this. Do I have it on this chart? And we'll get back into that cycle in a second, don't worry. They lose because of this emotional cycle, right? Normally what happens, right? For example, let's say when Bitcoin was at like, or even this year, right? When Bitcoin was at 15K, it's going sideways. No one was interested, but all the smart money was getting in, right? Then it maybe goes to 20K, 25K, right? So a couple of people are getting aware of it, but no one's really trying to get in. Media starts to get involved. Now what we're seeing, a lot of people obviously starting to pile in again. That's why we're seeing the market start to pull back now, right? So these cycles here, right, it plays on human emotion. So when you see this chart print over time, those 4-year cycles happen around. Obviously, you got the whole like fundamentals, like risk on, risk off environment too. But this also goes in alignment with that emotional cycle, where essentially what you'll basically see, right, is let's start it. So around like a year to 2 years before the halvening, you'll see the bottom print. Then after the halvening, you'll go in basically a 2-year bull market. From there, right, when you come to like November, December, at the end of that 4-year cycle, you will then enter a 1-year bear market. Now, around 2 years before the halvening, you'll bottom out. And around that bottom, which is always the same time, so 1 year, look at that, November, December, right, for a year. And then that's when the 3-year bull market starts. Normally it spends around a year accumulating and not doing a whole lot of stuff. And you'll see 2 years of pure, like, crazy price action. But all in all, it'll be an average of a 3-year bull market. And then what time of year? We said November, December. Look at that. November, December comes in. The high was printed exactly on the 25th of December, 2017. Then we enter a bear market for how long? For 1 year. Look at that. But when is the bear market? Basically 2 years before the halvening. And then guess what we do? On that bottom, November, December time, what do? We go on a 3-year bull market. And look at the high again, November, December, right, the 8th of November. And then what happens? 1-year bear market. And then what happens again? 3-year bull market. So we're still early. Like, that's the thing. We're still early. Like, we've still got that to go, at least. We've still got potential. So with crypto, all right, you got to understand those macro cycles. Yeah, the BlackRock ETFs are coming soon. So what you can do with this now, right? For me, right, I dollar cost average. So I don't give a fuck about the price that I'll buy. Now, of course, right, obviously this 1 year I'm not buying it, right? But for like between now and the next 2 years, I'm going to keep buying every single week, right? I don't care what the price is. However, when we get pullbacks and our trading plan gets met, I will take continuation entries. But why do I say DCA and dollar cost average over trying to pick an entry? Let's be real, right? In trading, you're going to take losses. However, with crypto, you don't take losses until you sell. What do I mean? So when you buy crypto, you actually hold a coin. You own the asset. Like, I haven't got my camera set up, but imagine like a physical phone, your physical phone, right? That is your phone, right? The value of your phone can fluctuate. Like what? I don't know what phone everyone has. I mean, what phone do you guys have? We got any Android guys in here? I hope not. We got any Android guys going on? Oh, what's happening? But Android, Simon, I knew. I'm joking. But anyway, right? So just like your phone, right? The value can change. But even if your phone is worth $1,000 today and then $200 tomorrow, do you still own the phone? Yes, it's yours until you get rid of it. So with crypto, right? If you have, now there's two things I need you to pay attention to this, right? There's two things. You have a private key and you have a public key. What is it? So this is how you own the coin. So for example, public keys, these are only given on exchanges such as Coinbase, right? Binance, Gate.io, any exchange where you buy crypto. And if you store it in there, they only give you access to a public key. Now, this is like renting versus owning. Public key, you can see your coins, but you don't have ownership of them. So if you have your coins in Coinbase or Binance and that exchange shuts down, bruv, your coins are gone. Like that whole Sam Bankman-Fried stuff, right, that happened like a year ago. Bro, he didn't, bro, the guy didn't go bankrupt. He took everyone's fucking money and ran straight up, right? Because he had access to their private keys. Now, what's a private key? Private key is ownership. Private key is the deed to the property. If anyone gets access to your private key, they can take your entire net worth and there's nothing you can do about it. So, how do you get a private key and how do you get a public key? Well, your public key will be given on any exchange, and it's like so if you send crypto to someone, right, that's what you do. So if you go on Coinbase and open up a wallet and you want to send crypto to someone, you'll send it to their public key. But their private keys, exchanges will not give you a private key. This is where you have to physically go out and get a offline wallet. So you've got two types of wallets, right? You're going to get a hot wallet and you're going to get a cold wallet. No, literally, they actually called this, right? Cold wallets. Now, what's the difference? A hot wallet, an example of this is Exodus. Now, Exodus is an app you can get on your computer, you can get on your phone. It can get on your phone. I wouldn't recommend it on your phone though. And it will give you a private key when you go to create the account. So you go on there, it's all free, obviously, but you go create the account and you have to write a private key down. That private key, guard it with your life, because if you lose that private key, bruv, your crypto is gone. There's actually someone, I forget exactly how many Bitcoins he had, but I think we can even probably Google it and show you guys. Guy lost Bitcoin key hard drive. I think it's like 1,000 Bitcoins or something. Yeah, 7,500 Bitcoins. This guy left. he lost his private key. 7,500 Bitcoins, bruv. All because he lost that private key. So don't lose the private key, right? What I would recommend doing is, so it'll be like what is the key? It'll be like a long series of words. I'd recommend like splitting it all up into different places and putting it in a bunch of places. Have copies, put them in loads of different places for backups. Now, hot wallet is good, but a cold wallet's better because hot wallets can connect to the internet, and I don't like that. I like cold wallets. Cold wallets are things like ledgers, right? A ledger, right? A ledger. I think I can get you guys discount for ledgers actually. Maybe if you scroll all the way up into the chat, you'll be able to see that. All right, a ledger, or you can get a Trezor, right? These are cold storage wallets. These are basically like USB sticks you plug in your computer, and that's the only way you can get onto the coin with the private key. All right, and it normally have a password on it. Some of them have fingerprints on it, and they're a lot safer that way. So what I would recommend doing, if it's basically anything less than like 1,000, I'll stick it on a hot wallet. It doesn't really matter. But anything more than 1,000, yeah, you have to get a cold storage wallet at that point. And obviously, if you're doing anything over 100 grand, I would recommend having multiple cold storage wallets at that point, right? Multiple cold storage wallets. If you're sitting on 500,000, you're sitting on 2 mil, 3 mil, you do not want to have all of that in one wallet, because if by chance you just slip up and expose your private key somewhere, bro, it's all gone. Don't keep all your eggs in one basket. Does that make sense about keys? Yeah, of course, right? Of course. This will be shared with everyone. Ledger. If you get the red one, you get 20% off. There you go. You own a ledger, but I hear a lot of negativity online about the security. Bro, a lot of it's just probably fear mongering, to be honest with you, bro. I mean, yeah. Like a lot of it's just fear mongering, bro. I mean, if you want, you can always diversify. But the main thing is making sure your private key is secure. With cold wallets, no, the USB doesn't matter. So like I could use your USB with my private key. It doesn't matter. It doesn't matter. All the USBs are the same. It's just like the USB gives you access to the blockchain, and obviously it's not online. You know, when you're not on the computer, obviously. But like to log in, it will have a password, and you have to assign it a private key. Is there a risk with leaving cold wallet in USD? Yeah, there is, because if you get a virus on your computer, it can obviously hack all your coins. One of my cousins is actually, I forget the exact job role, but like he does like cybersecurity and hacker and all that shit. Um, he actually made a virus once where like, and obviously you like doing cybersecurity, right? So you had to test it. And the virus was like, if you just click on a website, it downloads something on your computer without you even knowing, and it can see everything you do. So this is why you have to be very careful with the links you click on your computer, and more importantly, not connect your cold wallet to the internet. You know, I literally when I do that, I have a separate computer. I put it on airplane mode. I don't connect it, and I'm moving my money. I'm fucking about. You know what I mean, bro? So do not keep it plugged in. Lock it in a safe and hide the private key. Although only a finite amount of Bitcoin specifically, what about the possibility of unlimited amount of cryptocurrencies? Well, yeah, so we're gonna get into that, Oliver. Don't worry, bro. Obviously there's like I think there's around like 22,000 cryptos right now. But obviously you need to know how to buy and what coins to buy and stay safe from like a lot of rug pulls. Um, yeah, so we'll get into that. So anyway, with crypto, 4 year cycle. Does everyone understand the 4 year cycle? All right. How we are now have basically 2 years left of a bull market. Cool. Next thing you have to understand is money flow, right? And obviously, all of this, how convenient is it though? So all of this coincides with the fundamentals of the risk on environment. How convenient is it that when the bottom happened, dollar comes into 80% of every district? Inflation starts falling lower. Hmm. How convenient is it to have a new president in the US coming out next year? Hmm. Another thing, right? FUD, you have to understand. FUD, fear, uncertainty, and doubt. You're going to see a lot of fluctuations in your crypto balance. One day you'll be sitting at 100 grand, next day you'll be sitting at 30 grand, next day you'll be sitting at 300 grand. It will fluctuate. Don't be scared. You are going to be holding this thing for dear life. I don't even check my balance. I just add to it, right? Hold and hold and hold to the cycle. When it gets to November, December, screenshot this, 2025, you sell everything. You do not keep, I don't care what's going to happen. You're going to see a lot of money in your account. Yo, all the news, every one of your friends and family is going to be telling you Bitcoin's at 100K, Bitcoin's here. Oh my God, it's going up forever. You sell, right? You have to understand what we call FUD, fear, uncertainty, and doubt. What will happen is like in this game, it's the exact opposite of what you're supposed to do. So when everyone's fearful, when the prices are dropping, that's the time to buy. When everyone's excited and everyone's talking about it, it's too late. So this time is the biggest thing. Now, when I talk about FUD, you'll see a lot of like negative news events come out, all right, to will crash the price short term, right? For example, COVID. Right. Look, everyone, do you know, bro? I literally remember this. I was on the train, all right, and I literally remember when crypto was crashing, like this exact drop. I was hearing people stress on the train, bro. I need to sell my coins. I need to sell my coins, bro. I was literally sitting there spamming the buy button so my account got blocked. Like anytime you hear these negative news comes out, you will probably see, yes, the market crash, right? Obviously, we can do our technicals and it will respect our technicals. We can identify our reaccumulations and wait for the mitigations. But when you see that happening, we are in a buy the dip scenario. So you buy the fucking dip, right? But remember, what you're doing is you're DCAing, your dollar cost averaging. You're not going to care when Bitcoin's at 100K. You're not going to care if you got in at 5 grand or 10 grand or 7 grand or 8 grand or 10 or 40 grand or 31 grand. Now, I don't buy Bitcoin, but that's the combo for another day. We'll get into that. But like, there's going to be a lot of that coming out. There's going to be a lot of things like that designed to make you want to sell. You do not sell until the date, right? Now, altcoins will probably, now this is where money flow comes in. Money will first start to flow into Bitcoin because it's the number one coin in the space. From there, it will flow into what we call altcoins, right? Altcoin is an alternative coin. It's not Bitcoin, right? The biggest one is called Ethereum, right? And all these coins pretty much follow in Bitcoin's path. But for Ethereum, now Ethereum is what we call a functional coin, right? Bitcoin's a transactional coin. The purpose of Bitcoin is to do transactions. The purpose of Ethereum is to have more than one function. So on Ethereum, their coins have different what we call use cases. Now, this is how you need to know like if the coin is going to be worth investing into as well, right? And you have to like so when you're researching coins, I mean, there's a lot of like ways you can find coins. You can go on websites like coinmarketcap.com. All right, go on here. Where are we? In the CoinMarketCap, there's how many coins? Oh, whoa, God, 2 million plus now. That's boom since last time I looked at that. That's crazy. A few years ago, that was literally at 20,000. That's insane. Um, so how do you know, right, what one to buy? Because there's millions. So you have to do research, right? Like you can't just go in and say, oh, let me buy this random coin, right? Because a lot of coins can be what we call honeypots and rug pulls, where this is what we're going to get into now, where they have no use cases. So the first thing you have to understand when it comes to a coin is what is the use case, right? Or tokenomics, right? What does the coin do? What problem does it solve? Why would people buy and use that coin? Right? What sort of use cases can you have? What problem solving, right? They can solve real world problems. They can be like gaming coins, right? You've got a lot of coins that have in the gaming space now. There's so many different tokenomics you can get into. I'm not going to sit here and list them, but the main thing is just Google the coin name followed by use case or tokenomics, right? And you'll see all the purposes of that coin. You know, like is it trying to do fast transactions? Is it trying to do, you know, like there's so many different use cases for coins. You know, there's so many, but you make sure that coin is a solid use case, right? Number two, partnerships. Does that coin have any good partnerships involved with it? Right? Are there any big companies that are trying to put money with this project? If there is, that's a good sign. Number four, three, community. Right? Does the project have a solid community? If you're looking at the project and you're going on their Twitter, right, or joining their Discord, and no one's talking for months, bro, it's dead. Right? That is not a coin you want to be involved with. It's absolutely dead. All right. So you do not buy those coins that have no community. You want to make sure there's people who are avid, who like the project. You want to make sure like the developers are still trying to develop and do stuff with the project. And there's actually people there who like it. Next one, availability / delistings. How can you get the coin? Is it listed on exchanges? If a coin is being delisted off an exchange, you do not buy the coin. You get rid of it. All right. The reason why XRP is a trash coin, we'll get into that in a minute. And it didn't even make an all-time high in the last cycle because it was delisted. All right, it was taken off exchanges. People could not put money into it, so it will not go up in value. If you have a coin and it's been delisted off an exchange, been taken off the exchange, get rid of it. And that's competition. All right, competition. All right, is there any competition with this project? What other coins are similar and doing it? Is their competition better? Right? What are they doing? Is it better? If it's better, maybe get the other coin, right? But ideally, you want to see other projects trying to do something similar because that shows it's a good idea. And this is how you basically pick those coins, right? Now, if you have those wallets that we mentioned, right, and that's the fundamentals for the crypto thing, right? And if you pick those wallets that we mentioned, you'll be able to store majority of on there. Some coins you may have to get like they may have external wallets, but if you ever face that, I mean, it's not that hard. Like always, before you buy a coin, look up the white paper as well. Right, the white paper is essentially like the instructions for the coin and like how the whole coin works and all the software. So every coin you look into, make sure you read the white paper so you understand what you're actually putting your money into. And then and like obviously since then, with that whole cycle, we've just been respecting, the technical system. Like think about it. What did we do? We come back in, we mitigated some demand. All right. Obviously, this is a reaccumulation. All right. We'd prefer a 50, but what do we do? Right, timing. When do we come in? We come in when the inflation CPI year over year in the US starts to fall. All right. We know that's a sign for risk on environment. When price comes down there, let's look at the accumulation. Oh, by the way, it's starting to rain crazy over here. So if it cuts out, then there we go. All right. As we come in, what do? We get an absolutely beautiful change of character. We see the downtrend be stopped. You put on your volume here. And someone was asking about volume divergence. All right, look at the spikes in volume. We're seeing firstly absorption. We'll get into volume divergence. Absorption. What's absorption? When you have a seller's climax, phase A in accumulation, you want to see a volume spike. Why do you want to see a volume spike? What does volume mean? And this is just a standard volume indicator. Why do you want to see a volume spike? Because the downtrend's being stopped. That's showing you that absorption is occurring, a massive buy order's coming in and stopping that downtrend. How do you know it's stopping a downtrend? Because look what it's doing. It's consolidating. There's no follow through. Right? If you had that massive volume spike down here and then the market just did that, no, there's no buyers in the market. So that's the first thing, right? That volume spike. Then what should happen is as the market starts to accumulate and you get that spring, you should see another volume spike bigger. So you're getting divergence. See how the volume's increasing as we're getting lower and the market's continuing lower. Divergence, think about what's happening here. As price gets into more discount, there's more buy orders waiting. So we should see more buy orders show up because of the volume. Now, specifically, and again, if we want to validate it, right, seller's climax, automatic reaction, secondary test, 1 drive, 2 drive, 3 drives, argue a 4th drive. I mean, it doesn't quite come to the 50, but even if it's not, all right, that's still 3 drives, 4 drives, 5 drives, 6 drives, spring. Good question. We'll get into that. We'll get into that. And now look at this, right? What happened at this spring? Remember what I said earlier? FUD, fear, uncertainty, and doubt. The FTX collapse occurred. Right? That was one of the biggest exchanges on the planet collapsed. Everyone was super bearish at that point. How convenient is it? Look at where it is. Look at the date, November. November. After what? A 1-year bear market. So how convenient is it that we're in demand? We're seeing an accumulation, right? And we're seeing that FTX collapse as a spring. You see how now the fundamentals are aligning and inflation's coming lower at this point. And obviously, US dollar came into 80% of the massive redistro. But how is it that it's all starting to align up? Market sentiment as well. Everyone was super bearish at crypto at this point. Right? Well, crypto, when everyone's bearish, it's time to buy. When everyone's bullish, it's time to sell. Like it's really as simple as that. But then what happened from there, right? Obviously, right? Micro accumulation, then got a sign of strength. On that sign of strength, we had the Silicon Valley Bank collapse. Over $300 billion was lost from the Silicon Valley banks. In the same time period, $300 billion entered crypto. So what did? We reaccumulated. We then reaccumulated again. And now, well, we're in a markup phase right now. But what do I want to do with Bitcoin now? Well, I want to see, ideally, this thing come back down here. So how would I play that? I would, like, for me, I'm still going to dollar cost average into this. Right, my majority of my buying price was all the way like down here. But I'm still going to dollar cost average. So like every week, I'm still going to buy crypto. I couldn't care less about the price. It comes lower, I buy more. Obviously, if she comes down into here, this reaccumulation, I'm going to buy so much more. So like what I would recommend doing is having a bag on the side for the dips, but still dollar cost average anyway. You know, you can set up like auto payments where it can automatically like obviously buy crypto. Obviously, what kind of happened, mate? I mean, I think we are going to come a little bit lower at least to here, at least like 30. Let's have a look. All right, at least this demand here around like 38, and this is where we're going to get into the market outlook because of dollar. We go to dollar. That dollar is potentially pulling back up into supply. So if dollar pulls up into supply as well, all right, that's going to cause Bitcoin to pull back. So yeah, now final thing for the crypto side of training before we get into the outlook is I don't buy Bitcoin because the market cap is too big, right? So to make money in crypto, the easiest way to make money, I mean, don't get me wrong, you make money with Bitcoin, but here's the thing, right? You know, you put 100 grand in Bitcoin at 40K, right? The market cap on this is how much? $800 billion. So to double your money, $800 billion has to enter the space. Whereas you buy altcoins, right? ICP, we've been talking about. Why is it taking so long to load? Look at ICP. All right, its market cap is 4 billion. Well, it was 2 billion the other day. So it only needed to just double to go from $4 to $11. So for me, I prefer buying these smaller cap coins with great use cases, great partnerships, great communities, because the return on investment is much bigger and much easier. I'm not going to invest into the top 10 coins because like for me the risk is not worth it. Like obviously, yeah, I mean, I'm pretty confident with the cycle. Obviously, you can never be 100%. I mean, if it deviated from the cycle, that'd be the first time ever in history. But my point is, if I'm risking my money regardless, I want to put in something that's minimum going to 10x for me. You know, so that's why I'm not going to invest in Bitcoin or Ethereum. Like I like to invest into coins that have much smaller market caps. Like KDA, CSPR. I mean, there's so many. Like VT, AGIX, Ocean. Flow, XLM, BTT, XEN, SDLT. Unibot, Avar, INJ. Like, there's so many coins you can invest into. Obviously, like I put a whole bunch in the chat the other day. But yeah, just do your research on them, man. And if I was you, obviously I'm not a financial advisor, but I'm DCAing into coins. And I've been doing it all year. So I'm going to continue to do it this year, or next year, and the year after. And then realistically, when we come to so altcoins will probably crash. Like normally what happens is money flows into Bitcoin first and then flows into the altcoins. But when we get into 2025, like realistically, the altcoins, I'm going to be starting to cash out around like very slowly taking profit, like partial profits, just how we're taught. I'll be starting to take partials around like July, August, September, October, November with the altcoins. I'll be partially now because like with the altcoins as they're smaller market caps, it like less money can erratically move the price. So that means that you'll see much greater drawdowns and fluctuations on your portfolio balance. Um, so yeah, like that's why we hold. We don't bother trading it. Just hold them. No, the gains are still pretty good. A lot of coins have like staking potentials as well. Someone was asking me about this the other day. Staking basically means it's like a high yielding bank account where you can put your money into it and you'll get like 5% more coins than what you got. So if you have 100 coins, you'll get an extra 5 coins. With staking, like there's gonna be a lot of exchanges that offer really high attractive like what's the word? Really high attractive returns. I do not stake on any exchange because they don't give you the private keys, right? Remember, not your keys, not your coins, right? If they don't give you access to private keys, you do not put your money anywhere near it, all right? Just like if dog's got rabies, you don't go near it, right? If the exchange ain't got private keys, bro, you do not go near it. Do you think there'll be a lower pullback on ICP? Yeah, you can stake on Ledger. That's fine because you still own the private keys. So yeah, like you can stake with ICP. Do I think there'll be a pullback? I mean, the price is good enough, bro. I mean, we could. It depends what Bitcoin does. I mean, if we do, I'd like it to pull back to another $5 again. But I mean, bro, I'm looking at this thing to go to like $500, even 3K. So like my thing is, if it goes to 3K, you don't care if you got in at $9 or $5. You know, I mean, looking at the chart again, this is the thing. These cryptos will follow what Bitcoin does in Ethereum. But what Bitcoin does is based on the dollar. So dollar is daddy basically. So if we look at the dollar, we're pulling back right now. Um, but it all depends what dollar does, right? I mean, ideally, I'd like dollar to come up into here to short it to go lower, or wait for the redistro. I mean, if we do maybe something like that, we can get into it or that. And if dollar does that, then yeah, the cryptos are going to absolutely spunk higher. Should I wait now until it pulls back or put money into it? So I'm not going to tell you exactly what to do with your money. You have to make your own decision. And I know you don't want to hear that answer, but like you got to make your own decision. Write down why you're making that decision. Because if I tell you to buy it right now and it drops 50%, how are you going to feel? You're going to blame me. Oh, I just lost 50%. And then you might close, and then there's me dollar cost averaging and holding it for 2 years. Um, but with it, I will answer your question. Don't worry, but I'm going to give you the long answer first. Every financial decision you make, you have to decide, right? You have to write down why you're doing that. What is your principles? And if you don't get the outcome you want, number one, did you have enough data, enough sample size? And number two, did you follow your principles? Um, like I said, what I do, bro, is I have two bags. So I have my dollar cost averaging bag where I just buy in every week, regardless of the fucking price. I couldn't care less. Then my second bag, right over here, is on the side, waiting until we get the pullbacks. Then I'll buy more. So I would do both. I would dollar cost average in, and any lower we get, buy back in. That's what I do. I mean, looking at the chart of it, I mean, it's still early in the week. That's where we can start getting into the market outlook. Um, but yeah, I mean, again, it all depends on your game, bro. Like if you're trying to exchange trade, if you want, like, you know what I mean? If you're playing the long game till 2025, then just dollar cost average in, just split up your investment. Don't buy in all at one price. And just DCA. Keep buying in every week, every week, every week, and you'll get an average price.